Hi, I am Anna. I come from www.ntvforex.com. US Inflation Comforts Markets Analysis http ntvforex.com News ID B3E8DC 8/13/2026 55:42 am. The Buy Everything trade returned with a vengeance overnight, green light by higher than expected US inflation and core inflation. Both the month-on-month and year-on-year metrics outperformed, with the YoY core inflation, notably, rising 1.60%, well above the 1.10% expected. Wall Street rallied strongly, with the S&P 500 flirting with all-time highs. The US dollar fell, and precious metals staged an impressive comeback from their capitulation sell-off the day before. Digging into the numbers, healthcare, food, and housing have unsurprisingly risen. Energy, meanwhile, has fallen massively on a YoY basis, reflecting the collapse in oil prices. The dataset mostly reflects the rebound in consumer spending that has been telegraphed by other data from June to July. More consumers spend, prices go up, Economics 101. NBSP. The inflationists should probably get back in their boxes for now. The overnight continuation of the Buy Everything trade was due to a sigh of relief that the US isn't facing deflationary pressures, and not because a quantitative easing-led, hyperinflation rider of the apocalypse appearing on the horizon. The US Treasury sold $38 billion of 10-year notes overnight with a strong bid-to-cover ratio. If inflation were really an issue, that would not have happened. Still, the fact that the US is not heading down the Japanification road, is as good a reason to buy anything that moves as any. Australian employment data also outperformed this morning. Both full-time and part-time jobs rose above expectations, although the unemployment rate remained stubbornly high at 7.50%. The data follows an even more impressive rise in the June data. Again, before everyone gets excited and starts mumbling V-shape under their breath, a dose of reality. The June and July data likely reflects the easily gained peace dividend of Australia reopening after earlier national COVID-19 lockdowns. Equally impressive gains will be much harder to come by in the months ahead. NBSP New Zealand is in the spotlight this morning, and rightly so. More community cases of COVID-19 in Auckland have been recorded. Auckland is in partial lockdown to control the outbreak. The government has already telegraphed that new cases reported outside of Auckland will result in a return to national movement restrictions. That is likely to weigh on New Zealand equities and the currency today, with New Zealand's tentative recovery in grave peril should the worst occur. Europe publishes inflation data from across the continent today, and it will be interesting to see if the rises of last month are reflected in today's data. Again, the increases seen previously likely reflect the reopening of economies across the Eurozone, and the subsequent upswing in spending on goods and services. Sagging data may lead to pressure on the euro, implying, as it does, a swift return to near deflationary business as usual that has bedeviled the Eurozone over the past years. US weekly jobless data will be the center of attention this evening. Markets are pricing in initial jobless claims, and continuing claims to remain stuck at 1.2 million and 16 million respectively. President Trump's cobbled together pay cut stimulus follow-up, while better than nothing, will have no noticeable impact this week. That said, given the market's buy every mood, a fall in the headline numbers is likely to more FOMO momentum. Perhaps Tesla will have another daily 14.0% rise in its share price. NBSP Asian equity markets are sluggish. Asia is reluctant to fully buy into the surge seen on Wall Street overnight, as the S&P 500 rose 1.40%, the Nasdaq jumped 2.13%, and the Dow Jones rose 1.03%. Only Japan and South Korea have leapt aboard the Wall Street rally, the Nikkei 225 climbing 1.0%, and the Kospi rising 0.80%. Perhaps with one eye on the upcoming US and China trade deal meeting, mainland stocks markets are quiet, with both the Shanghai Composite and CSI 300 flat for the session. Both indices are lying in the exact middle of their 6-week ranges. After rallying initially on encouraging statements from Tencent, Hong Kong's Hang Seng has eased by 0.70%, having failed to test its 200-day moving average DMA at 25,660. Regionally, Singapore has climbed 1.30% today, with Kuala Lumpur 0.85% higher. Weak earnings data from Australia, though, see the ASX 200 down 0.90%, and the All Ordinaries falling 0.60%. New Zealand has recovered some of yesterday's losses, rising 0.30%. The mixed picture in Asia appears to be reflecting an emphasis on regional issues, as opposed to universally slavishly following Wall Street. Asian investors may well be placing more emphasis on the importance of the US weekly employment data, than the overnight inflation data. Europe, though, I would expect to open higher following Wall Street's strong performance overnight. NBSP. The US dollar retreats after US inflation data. The US dollar gave back all its initial gains yesterday, finishing the day lower after a reliable US bond auction and higher inflation renewed confidence that the recovery remains on track. That spurred a restart of the Great Rotation, with the dollar index failing ahead of 94.00 and falling 0.25% to 93.42. Elsewhere amongst the major currencies, it was much the same story. The Euro, GBP, CHF, AUD, and CAD all were recording modest gains versus the greenback. Taking a step back, most of the G10 now appear to be stuck in range trading mode. Euro USD at 1.1810, has merely moved to the middle of its weekly range. It is much the same story for GBP USD, which is at 1.3055 today. Either January 1940 or 1.3200 would have to break on the upside to signal that a new US dollar retreat has started. NBSP major currencies look set to continue moving noisily within the August ranges for the remainder of the week, with the next big move on the US dollar still to be unveiled. Unfortunately, that means intraday trading will likely be dominated by the intraday FOMO brigade, with investors looking for facts to explain the moves. Unless the US employment data surprises, one way or the other, there is a strong case for moving to the sidelines for now. NBSP US inventory falls push oil higher. US official crude inventories fell by 4.5 million barrels overnight and have now fallen by over 22 million barrels over the past few weeks. Distillate and gasoline stocks also fell, implying that economic activity in the US remains on a growth path. However, one could argue that declining US domestic production is the underlying culprit. The data was enough to spark some life into slumbering oil contracts. Brent crude rose 1.85% to $45.30 a barrel, and WTI rose 2.15% to $42.55 a barrel. As the dust settles though, I note that both contracts remain enclosed in their one-month ranges, albeit now at the top end of them. A decent fall in weekly initial and weekly claims this evening could be the trigger oil needs to retest its one-month highs. After seeing some initial profit-taking sellers, oil in Asian trading has returned to unchanged levels from the New York close. Likely though, the rallies on both will fade from these levels, as they have in previous weeks. Brent crude has resistance at $45.85 and then $46.25 a barrel, with initial support at $44.30 a barrel. WTI is testing its 200 DMA this morning at $42.30, which form intraday support. A daily close above would be a bullish technical indicator. Resistance is nearby at $42.80 and then $43.50 a barrel. NBSP gold clings on after a roller coaster overnight session. Nobody can complain about a lack of volatility on precious metals at the moment. Yesterday's session provided a roller coaster session for traders that wouldn't look out of place at a theme park. After opening at $1,912 an ounce, gold plunged to $1,863 an ounce in Asia before rallying as high as $1,949 an ounce. Unbelievably, after such a volatile session, gold recorded a headline of just 0.25% for the day, closing at $1,916 an ounce. Gold in Asia if 0.60% higher at $1,928 an ounce, having traded as high as $1,949.50 an ounce. Asian investors seem keen to buy the dip but are not prepared to chase the market higher. NBSP. A weaker US dollar undoubtedly helped God of its knees yesterday, although I note that gold's rally was already well established during the Asian session. If nothing else, gold's price action highlights two things to me. Intraday prices movements are dominated by very non-sticky fast money traders in a low liquidity environment. Secondly, longer-term investors appeared in force as gold fell towards $1,850 an ounce and appear to be happy to pick up more on dips in Asia today. What they are not doing is chasing gold mindlessly higher. NBSP. The latter is a sound strategy, the former is for the brave and fast only. Gold has support at $1,913 initially, followed by yesterday's low around $1,863 an ounce. In this environment, it certainly has the capacity to retest that low, perhaps even as far as $1,830 an ounce. Initial resistance is at $1,949 an ounce, yesterday's highs, followed closely by $1,960 an ounce. NBSP. The volatility in recent days has extended ranges massively, and consequently left lots of clear air between technical support and resistance levels. Volatility will continue. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.